Okay, good afternoon, everyone. My name is Julian Morse. I'm the MLA for Frame Lake and chair of this committee. We are having a public briefing for the Standing Committee on Government Operations today. It's being live streamed on the social media channels. Before we continue, just as a reminder for everyone, particularly our guests, to direct all comments and questions through the chair and wait for your mics to be turned on before speaking. This helps keep the meeting running smoothly. I'll now ask members to introduce themselves, starting with members in the room. Mr. Jericon, do you want to start us off?
Yeah, thank you, Mr. Chairman. My name is Richard Jericon. I'm the MLA for Trinidad-Walidi. Merci.
Good afternoon. I'm Kate Reed. I'm the MLA for Great Slave here in Yellowknife.
Excellent. And we have a couple members online. I'll start with Mr. Rogers.
Thank you, Mr. Chair. Good afternoon, everyone, and welcome. My name is Denny Rogers. I'm the MLA for Inuvik Boot Lake.
Excellent. Thank you very much, Denny. We also have Mr. Robert Hawkins, the MLA for Yellowknife Centre online, and we're still having some technical difficulties there, but he is, as always, happy to join us, is what he would say if he could speak out loud. So this afternoon, as part of our statutory review of the NWT Heritage Fund Act, we are pleased to welcome Deven Mitchell, Executive Director and CEO of the Alaska Permanent Fund Corporation, who joins us by video conference. So thank you very much for joining us, Deven. We'll begin with your presentation, and then we'll do a Q&A after the presentation is done. So I'll turn it over to you.
Thank you. Thanks for the opportunity. And it was interesting to take a little bit of time just to learn about the Northwest Territories Heritage Fund as well. And so I think that there is a lot to be gained from the interactions between entities that are in the process of ensuring that the future residents of our respective governments and territories will have in Alaska, and so Canada was always, to me, kind of, I hate to say it because of some of the recent news, of course, but it was just like, I didn't consider it a different country. I didn't consider it not a different country in the sense that it was part of the U.S., just that it was a very familiar place and a place that I felt a lot of touch with, meaning that I could relate to the people from Canada that I met and interacted with, and I've always appreciated the opportunities. So thanks again for providing some time. We put together a presentation. We'll start with a little background. The state of Alaska back in the 1960s was a pretty austere place. There wasn't a lot of excess. The state's budget at the time was about $150 million a year. And some of the primary revenue sources you would have seen listed back then no longer exist in sufficient quantities to be quantified by the state of Alaska. So in the late 1960s, there was oil exploration going on up on the North Slope of Alaska, and the Prudhoe discovery in 1968 led to a lease sale in 1969 that generated $900 million for the state of Alaska. So 6 times the annual state budget for the state came into the treasury. And as you can see from the news headlines there, Alaska was rich out of the blue. And it seemed like an insurmountable amount of money for the residents of the day to take advantage of. And yet by the time the pipeline was being built to transport oil from the North Slope to Tidewater and Valdez, the majority of that money had already been spent. And so the state realized, the residents of the state realized that seemingly insurmountable amounts of money could easily be spent by the state and to try to satisfy the needs of the residents of the state. And that set the stage for the creation of the Alaska Permanent Fund by a constitutional amendment. We have in our state prohibition on dedication of revenues. And so it requires a constitutional amendment to dedicate revenues to a fund and save them. And so that's what happened in 1976. And it was just shy of a 2/3 margin. So wildly popular in any metric that you might use for evaluating an election. And the first deposit of royalty revenue from the North Slope was made in 1977. and that fiscal year's total was $734,000. So again, a kind of an extraordinary moment in Alaska's history where the current generation of people recognized the need to save some of the money that was going to be generated during their time for the future benefit of the state. So sacrifice the ability to do or to have that money to spend on themselves in favor of spending it on the future of our state, which is pretty altruistic and somewhat incredible when you reflect in some of the things we see in today's era. The actual use of the permanent fund wasn't determined until 1980, and we have some slides that will describe that in a moment. So next slide, please. So there was a pretty vigorous debate. The initial constitutional amendment didn't dictate how the fund would be used. And so there was this idea, is it a public trust or is it a development bank? And I think the Alberta Heritage Fund is kind of one of the things that we juxtapose ourselves with, that I think this same debate wound up falling towards the development bank concept in that instance. And if you compare performance of the money that was set aside and invested in our investment fund relative to the Development Fund of Alberta, you would see a stronger performance in the investment fund. And so it's different goals. It depends on what the purpose of your fund is. If it's truly to provide for intergenerational equity from resource development and extraction, then I think the investment fund is probably more appropriate. If it's a savings function that's designed to provide for additional economic development, then a development bank is more appropriate. And one's not right or wrong over the other, it's just different outcomes. As far as the investment of the permanent fund goes, there's a public corporation that we work for called the Alaska Permanent Fund Corporation, created in 1980 through statutes, and we invest the permanent fund for the benefit of Alaskans. One of the key things that was also created was a permanent fund dividend program. And so up until our fiscal year 2019, the only use of the earnings of the permanent fund was to provide a dividend payment to the bona fide residents of the state of Alaska. So a fairly high residency standard, but money is paid out every year to the residents of the state of Alaska. And what that did is it ensured that the residents of the state took notice of this savings account and didn't allow it to be used for a pet project or some of the other things that invariably become important to a certain year's generation of elected officials. Our program is fairly protected from that because of the buy-in from the general residents of the state of Alaska that the dividend program provides. Next slide, please. And so the constitutional amendment language is on the left here, and it was pretty simple. Like I said earlier, it didn't dictate how the fund was going to be used. It just said, hey, we're going to save at least 25% of royalty revenues that come into the state of Alaska. The state by statute saves a little bit more than that, but that's the basic construct of the constitutional amendment. We're going to save money, and then we're going to invest that money. We're going to put that money in income-producing investments for the benefit of Alaskans. And then thirdly, that all earnings would be transferred to the general fund of the state of Alaska unless otherwise provided by law. And so we do have a statutory framework that's built around the permanent fund that's described on the next page, and we could just shift to it now. That the permanent fund, there's additional language that creates a system for recognizing when earnings become spendable, and for segregating earnings and accounting for earnings. But and some of the concepts that we rely on, and if you were considering permanent changes to your fund, I would suggest you would want to have on the table as for certain the second bullet that depending again on what the purpose of your fund is, if it really is a trust for intergenerational equity from resource development, that you want to have a maximum risk-adjusted rate of return to provide a maximum benefit to your residents by investing that money in the worldwide economy versus trying to develop economy. Because when you try to develop economy, invariably you have, I think, a higher probability of failure, at least from Alaska's experience. And so embedding a goal of maintaining safety of principle while maximizing total return. Some people might call that the prudent man or prudent person rule, that the money, that being embedded in your fund at the highest level ensures that you won't have one group, 1 year's worth of political or elected officials that decide that they're going to spend more than they should on something, that they're going to take money out and put it into some, whether it's a project that they think is a can't lose project, even though many of those do, or it's a use of the money that otherwise wouldn't abide by the prudent person rule. So while we have that in statute, it's something that I would if we had it to do over, or if I could change things, I would suggest that would be embedded in the Constitution as well. And then again, providing for a savings device. So some of it echoes a lot of the language that you find in a more basic fashion in the Constitution, where we have a device managed to allow the maximum use of disposable income for purposes designated by law. And next slide, please. This just shows the progression of the asset allocation of the permanent fund and the fact that the permanent fund is invested around the world. And so Alaska has a relatively small economy. Our GDP from worldwide perspective is relatively small. It's really vacillates, but based on the price of oil, but around 50-60 billion. And so taking a small state with a small population and creating a fund that's invested around the world and relies on the worldwide economy for revenue generation is a huge diversifier from a revenue perspective as a government. And so that's created incredible value for the state, where we're basically providing revenue to our residents as a result of the world's economy's success. If you look at the asset allocation that's shown in the pie charts on the bottom and to the right, where you can see we started off very conservatively, where we were entirely invested in fixed income. And some of that's a function of the decade of the 1970s and the success of fixed income relative to some of the other asset classes in the day. But there was a recognition through time that diversity within the portfolio and exposure to other asset classes, more risky in almost all cases, asset classes, added value to the expectation of total return over a long period of time. And so in the 1990, you can see that real estate and public equity was added, and then private equity and absolute return, which is hedge funds in 2006. And then currently we also have private income and tactical opportunities, in addition to a small cash allocation. And so that target allocation is designed to generate a total return or an inflation-proofed return of 5%. So we want to hit inflation plus 5%. So that's our target. It changes every year based on what inflation is, but that's what this portfolio is designed to accomplish. Next slide, please. This shows the history, the value of the permanent fund's principal and earnings reserve account. That's one of the structure components created by statute, is that we have principal, which is protected by the Constitution, and then we have earnings that reside within the earnings reserve account, and the combination of those two is the permanent fund's balance. And you can see the light blue depicting the earnings reserve account on top of total principal and the growth of that. And there's fits and starts as you have the cyclicality of markets throughout this time frame. You can see various times where you have a peak and then you decline and then you build back to a new peak. And that's to be expected. It's difficult in a public fund, and you're in a bit of a fishbowl because every resident of the state of Alaska, in our case, is interested in our performance and has an opinion about how our performance could be better. And so it does challenge us, but that's not a bad thing. I think that at the end of the day, the light of day is a good thing. And if we can defend why we have the portfolio we do and the long-term objectives and the ability to resist some of the short-term temptations in the capital markets, that's all to the benefit of that intergenerational compact that we've created. The fund currently sits at around 83 billion, and you can see the total return by fiscal or by through that same time frame. It's by fiscal year, but through that same time frame, where in almost every year we've had a positive total return, and generally a fairly strong total return that's just under 9%, 8.72%. Next slide, please. This slide is designed for our local audience. It really is depicting the challenge of hitting an inflation-adjusted 5% rate of return. That the gold dot on both of these charts represents the target rate of return of CPI plus 5%. And you can see that when you have the bars represent 10-year look-back average returns. And you can see that for 10-year periods from 2008 until 2018, each one of those 10-year lookbacks didn't hit that target. And so a long period of time where you're not hitting the target. And that is the reason why when you are exceeding the target, like you see from 2019 through 2023 and right on top of it in 24, that you aren't tempted to spend extra. You have to maintain your discipline to your draw rate, and a draw rate of 5%, an inflation-proofed 5%, a real return of 5% is a high target, and it's difficult to hit. And we can't expect to hit it every year with an institutional portfolio like we have. On the right-hand side is the 5-year historical returns in comparison to the target. You can see that's as predictably a little more volatile, a little more choppiness, but a somewhat similar story where you wind up with periods of time where you exceed fairly significantly the targets, and then periods of time, 5-year time frames where you underperform. And this, maybe in your context, the takeaway would be the importance of rules-based systems and structure at the most difficult to change level. In our case, it would be constitutional rather than statutory. Is advisable for limiting your access to your fund if you wanted to be able to withstand the test of time and withstand inflationary pressures over time. Next slide, please. This just shows the savings in inflation proofing. One of the interesting things when you think about our fund holding $83 billion today, the actual revenue from royalties that's been deposited into the fund is that dark blue at the bottom of the bar charts on the left. So in FY25, $20 billion. So we've saved $20 billion. And if you remember when I described the Constitution, it said that all earnings will go to the general fund unless provided by law. So if we hadn't had the right leaders at the point in time that they constructed the law that created the earnings reserve account and the inflation proofing concepts that are in statute, and all of those earnings had been transferred to the general fund, we'd have a $20 billion fund, which is would be fairly catastrophic for our state at this point, given the importance of the permanent fund and its revenue generation for the state of Alaska. So the $20 billion from oil revenues, royalties, and then we have inflation proofing of 27.6 billion. We have special appropriation. The legislature has appropriated money from the general fund back in the 1980s and otherwise from the earnings reserve account of the permanent fund into the principal of the permanent fund from time to time. It's kind of hard to read, but about $11 billion. And then we have unrealized gains. And again, our system isn't well suited to modern accounting terminology and process. So when you hold an investment, let's say it was Microsoft is a popular example. I bought some Microsoft stock at 100. I own it a year later, the price is 105. It's gone up $5. I don't, in our system, those are, so in the accounting world, that's unrealized gains of $5. In our system, we can't spend money unless we realize the gains. And so in holdings that we have for a long period of time and in private market holdings, we tend to have a lot of unrealized gains, and that creates a lot of noise in our system on how is money available, what's really protected. And so again, if you have an ability to use modern accounting terminology, that's beneficial. As far as use of earnings, there's been about 105 million of earnings within the permanent fund, some of that unrealized, of course, still. But we've paid out about 47.5 million through the permanent fund dividend program, and then through a percent of market value distribution that we've had since fiscal year 2019. And then we have a small account, the Alaska Capital Income account, that's paid out about $500,000. And then otherwise, the earnings continue to reside within the permanent fund in some fashion, whether they're in the principal or in some other allocation within the fund. Next slide, please. This shows the value of the percent of market value transferred to the state of Alaska. If you look back on the chart on the right at the history of revenues of the state of Alaska, there was incredible volatility, and it was around 90% of our revenue came from oil production. So taxes, excise, property, royalty revenue on oil. And with the implementation of a percent of market value payout of the permanent fund, that created incredible stability for the state of Alaska's revenue streams, which has been extraordinarily beneficial, and at a time when there was extraordinary need with a time frame from 2014 through 2020, 21, when the price of oil was historically low. That formula is shown on the left, where it's a 5-year average balance. So the last 5 completed fiscal years ending balance of the fund, that is the amount that we take 5% of and transfer it to the state of Alaska annually. And for the current fiscal year that starts July 1, that's 3.8 billion. And for the coming fiscal year, we're estimating 4 billion. That smoothing that's built into this formula is fairly important as well, that you can have big movements in value in your fund based on market. So our fund is at around 83 billion today. It was, you can see back in 21, it was 81.5. And if you had an annualized POMV where it's just that year's balance, you can see like from 20 to 21, you'd have a pretty significant shift in revenues up, and then you'd have a shift down, and it would not be as stable and reliable a revenue source, which in my view, governments want stable and reliable, not volatile. And so that's an important part of the construct of a POMV model. Next slide, please. Our trustees have put a lot of thought into the permanent fund and its structure, and there have been 10 trustees papers over the years that have provided an opportunity for them to provide their views to policymakers and the general public of the state of Alaska. This is the latest one. It was released in January of 2024. It outlines some of the deficiencies of our current construct with this statutory framework of a earnings reserve account where realized income goes, the unrealized income conundrum, the requirement that inflation proofing be done manually, that the legislature can choose not to do inflation proofing, that's a negative, that there's an ability to overdraw the permanent fund. So if a current legislature and governor wanted to, they could draw more than a 5% amount at this time based on available balances within the earnings reserve account. So all of those things are concerning from a sustainability perspective and longevity perspective. And so there's recommendations in here to consider shifting from the current construct we have to a constitutional percent of market value structure that would resolve some of the deficiencies of our current construct. Next slide, please. This slide just shows our current construct, and I mean, there's a lot of little arrows spinning around and going out, and there we could have levers for these various some of the items on the bottom where there's a lot of manual movement that's required and mismatches between the reality of having a public trust and our current system that again, we're advocating that this could be simplified and it could be more greatly protected, and we could ensure that the sacrifice of the past would be maintained for the intended purpose of benefiting all generation of future Alaskans through a constitutional change, which is depicted, I think, on the next slide, please. So this is what we've been advocating for. So going from that noise to this simplicity, still have the same contribution requirement and allowances, but just one fund, no accounting requirement to determine whether something's realized or unrealized from a gains perspective, and no requirement for inflation proofing, just a one limited draw that we believe would maintain the value, the purchasing value of the fund in perpetuity. And so this has gotten some traction in our legislature. It requires, again, a constitutional amendment, which is the highest bar that our state has, which is a 3/4 vote of each body or the combined bodies of the legislature. And then the governor's superfluous at that point. We don't need a governor's signature, but a vote of the people to ratify the constitutional amendment. And so, in my view, this, again, if you, I saw that you guys consider changes to your fund from time to time, and our trustees believe, our advisors believe, and I believe that this is the model that you would look to, not what we're doing, but what we're trying to do. Next slide, please. And these are just some of the reasons why, and I alluded to some of these earlier, but this respect, protect, and provide. So these savings that have occurred within our fund, they didn't occur during times of plenty every year. There were some really difficult times in the state of Alaska. One time frame in particular was the 1980s. The state didn't have some of its savings accounts that are designed to deal with the volatility of oil revenue at the time. And so the state went from having, let's say at the time it was a $3 or $4 billion budget, to having to compress down to a $2 billion budget, or a 50% reduction. And at the time, it would have been incredibly tempting to not put the 25% of royalty revenue that you were depositing into the permanent fund by statute in. It would have been incredibly tempting to use the earnings of the earnings reserve of the permanent fund to provide for the needs of that year. And instead, those legislators appropriated the balance of the earnings reserve to the principal of the permanent fund. So they essentially took it off the table so that they didn't have the temptation. And it was one of the worst recessions, that time frame of the state of Alaska, that we didn't really claw out of until the Exxon Valdez environmental disaster happened outside of Valdez, and the amount of money that Exxon had to spend and the federal government spent on that cleanup effort was really what got our economy chugging again a little bit, at least on 5 or 6 of the 8 cylinders. And so to me, the idea of spending money in an inappropriate way is not respectful of that legacy. And I think that dovetails into our indigenous peoples' philosophies here in the state of Alaska. It dovetails into, I think, people that have been and are invested in the state's philosophy. And it's certainly anybody that gave something up during their lifetime because of a savings, and seeing somebody today have an outsized benefit. It is not respectful. And then protecting so that that there wouldn't be the ability to appropriate more than an appropriate draw amount out of the permanent fund. So the percent of market value, that making that a hard limit rather than a recommendation. And then ensuring that there's always going to be revenue into the future. At this point, the state of Alaska relies on the permanent funds transfer for over 60% of its unrestricted general fund revenue. And that's incredibly important to our state and our state's economy, and allowing or having the potential of one generation, 1 year's worth of elected officials not maintaining that is something that everybody should be interested in fixing. And next slide, please. I think that was it. So if there were questions, I'd be happy to answer them, and hopefully that all made sense to you.
Okay, thank you very much. I personally, I mean, it was a lot of information to digest, so I'm still kind of taking in the 2-account structure, but me aside, I have members with questions, and we'll get to those. First member I have up is Mr. Rogers, so go ahead, Denny.
Awesome. Thank you, Mr. Chair, and thank you very much for the presentation. It was very interesting and certainly well put together, and appreciate that. One of the things we're doing, our Heritage Fund obviously is in its infancy, I guess. It hasn't been around that long, and it's certainly not $83 billion, unfortunately. But one of the things we are looking at is kind of the oversight of the fund. The governance side of the fund is one of the things that we're discussing, and how we do that. And both governance, I guess, and asset management as well, if you will. Basically when you look at asset reclassifications and things like that, and investing models, whether or not you're looking at if ethical investing comes in, or when you're doing your equities, how you do that. But I wonder, could you speak, and I know that's a lot, but a little bit on the oversight, the governance oversight, I guess, of your fund and how that works, as well as the oversight of the asset management itself. Thank you.
Definitely through the chair. That's a great question, and our governance is set up. We're a public corporation of the state of Alaska. The Alaska Permanent Fund Corporation is, and so we're intended to be available, but a little aside. We're still part of the executive branch, so our budget is appropriated by the legislature, is approved by the governor, it's appropriated by the legislature, and then the governor can veto or sign our budget into law. We have a 6-member board that's appointed by the governor. 2 of those members are members of his cabinet, one of which must be the commissioner of the Department of Revenue. I think that there's a struggle to me with our construct to ensure that that political goals don't become the goals of the corporation. Our goal should always be to maximize risk-adjusted rate of return. So be aware of risk, take risk, but mitigate risk to maximize returns. And when I'm not sure how it's possible to get to a purest form of that, because it's been my observation that there's when the governor appoints you to something, you have you could have an allegiance to that individual for that appointment, even though as a fiduciary to a fund you shouldn't. It's observable from time to time that it occurs, and so it's a challenge. I think to the extent that you can have policies and at the highest level, again, so that they're not recommendations, they're actual rules for purposes of dictating action within your fund, that's good. I think that to the extent you can remove that political element from your fund, that's good. But those are both challenges. We have, I don't know, our governance is a thick deck of we have bylaws, we have policies, we have resolutions. They're all intended to keep us on the straight and narrow. But then you go, okay, what's the enforcement? And so if there's no enforcement, or it's like if you're playing whatever game, basketball, and you got the ball and you step out of bounds, well, you're out. Okay, it's the other team's ball. Well, you're like, wait a second, no, my foot only went a little bit out of bounds. Well, no, it's a hard rule. It has to be hard rules, and there has to be a referee to enforce it, because if the ref doesn't see it, it didn't happen. And so it's this kind of combination: who's going to be the referee, and how are you going to establish rules? So it's a challenge, and I think a lot of times we just, as government entities, have to do the best we can. As far as investment goes, our board is charged with setting the asset allocation, but they don't make any specific investment decisions. So they don't call up and say, hey, I've got a real humdinger here and think you ought to invest in whatever that might be. That would, if they did, we'd say, thank you very much for the call. We'll take a look at it, and we'd hand it over to our professional staff. So we have 50 or 67 positions here at the permanent fund. Around half of those, it's around 30, are investment positions. And we tend to work primarily, it seems like a lot of our best work is with managers, other than on our fixed income team, where we do deploy directly. We used to use managers on the fixed income side. We're able to migrate towards a direct program. Direct programs in some of the other spaces are much more difficult to implement, just because of limitations on our ability to obtain personnel horsepower. We can't hire somebody and pay them $1.5 million, because we're a government, right? And nobody makes $1.5 million that works for the government. But the fund that we want to participate in, that has the best performance, their senior people are going to make $1.5 million a year. And so if you want performance, you have to be able to get that talent. And if you can't get that talent, you're not going to have that performance. You're going to have poor execution. So we tend to, on a lot of our private market exposure, so things like private equity, private income, which is infrastructure and credit, real estate, to a somewhat lesser degree than those first two, and hedge funds, we are absolute return. We rely on external partners to provide a lot of that investment horsepower. So we pick good partners rather than do the nuts and bolts investing on those categories or asset allocations, where on the fixed income side, we are doing the nuts and bolts. So I'm not sure if that answered all of your questions, but maybe part of them.
Thank you very much. That's quite a bit of information. Mr. Rogers, a follow-up on that?
Yeah, no, that's you did. It's excellent information. It's interesting that the board actually decides on the and the asset allocation. I think that's interesting. And so the board essentially is an arm's length, and from what I understand, is a Crown corporation. And you said that the governor appoints. Now, are there any? Well, I guess would be at least one. Or how many of your board members are actually what you call senior bureaucrats? We call deputy ministers here. Sit on that board through those appointments. Thank you, Mr. Chair.
Thanks.
How many bureaucrats? Is that- So, yeah, we don't have, that would maybe be another thing that would be worth considering. Are there qualifiers for being, on the Board of Trustees that right now we have the Commissioner of Revenue. His investment experience prior to becoming the Commissioner of Revenue was very limited. So he's a smart guy and he's picking things up, but not a strong background in investing. We have the Commissioner of the Department of Transportation, who is a large agency, and again, he's a smart guy in picking things up, but a difficult undertaking to make decisions on an $83 billion fund. And then we have 4 private members who have a variety of experiences, some of which is probably more appropriate and some of which is probably less appropriate to service on the board. But at the end of the day, I think it means that staff has to try to do a better job to ensure that a layperson board can make informed decisions. And that's tough because you don't want to tell them what to do. They have to come to their own conclusions, but if they don't have a good base, it's a little bit more art than science. It sometimes has been my observation. And so to the extent you were able to put some investment experience criteria for at least some of your board members, I think it would be beneficial. I think there's other aspects of service on a board that can add value. Everybody doesn't have to be a professional investor, but certainly having at least 2 or 3 is on a 6-member board would be advisable.
Okay, thank you very much. Do we have further questions from committee for the presenter? Mr. Rogers, do you have a second round of questions, perchance?
No, thank you, Mr. Chair. And again, just very interesting. I think, yeah, it's difficult to get away, especially for us, a small jurisdiction, from the patronage appointments. And we've been kind of, you describe probably many boards in the Northwest Territories as well in your description of your board when you talk about a layperson board for all intents and purposes. And you're right. You don't have to have all accountants and lawyers on boards or investment managers, but certainly a screening for that, would be helpful. So no other question other than just to say thank you. I appreciate that. Appreciate the update. It's a great presentation. Thank you.
Okay, thank you. I certainly have a couple questions of my own. The first one I wanted to get better understanding about was the inflation proofing. So my understanding is how you described it is that there's rules requiring inflation proofing, but I didn't get enough time with it to fully wrap my head around it. So can you help us understand the rules around the CPI plus 5% and how the fund is inflation proofed?
Definitely, Mr. Chair. And so this is part of the statutory framework around our permanent fund, that there's a statute that requires that the principal be inflation proofed annually. And the concept goes back to some of the early trustees that one of our trustees called inflation proofing the thief in the night, because if you want to buy a loaf of bread and it costs $3 today, well, what's it going to cost in 5 years? It's going to cost $4, and in 10 years it's going to cost 5 or 6. And so in order to ensure that the fund maintains its purchasing power, you want to have a deposit to principal to maintain that purchasing power through time, and we call it inflation proofing. The CPI plus 5, so our draw on its face is 5%, right? We have a 5% of market value draw on the permanent fund. That lagged value that was described in one of those slides, where it's the average balance of the last 5 completed fiscal years. That makes it smaller on average if you have a generally ascending fund value through time, which has been the case for our fund. So the draw rate is actually something less than 5%, which is arguably where it should be, because like I said earlier, 5% is kind of a 50-50 proposition that you're gonna hit a 5% plus inflation, whatever the rate of inflation average is for any given time frame. And so so that combination of statutory framework and inflation proofing the fund, and then a draw rate that takes into consideration the impact of inflation, I think is all designed to ensure that if this fund can today provide for 60% of the state's budget, if the state's population and the needs of the state were to stay the same, in 50 years, it would be able to provide 60% of the state's operating budget.
Okay, thank you for that. I appreciate that clarification. And the other question I had was just regarding the change from having an earnings reserve account to the single account. Because my understanding of how the earnings reserve account works is that the percent of market value draw is what comes out of the ERA. So why is there a need to change to the single fund with the POMV? Because either way, I mean, the withdrawal is based on the POMV. So can you help me better understand why eliminating the ERA is considered a need?
Yes, Mr. Chair. So there's multiple reasons for considering the change. The first one would be that because of that statutory construct where the money that's available to expend in the earnings reserve account is only realized gains. And so we've had a period of time where we've ramped up exposure in illiquid asset classes, private market asset classes. So we have around $13-14 billion of unrealized gains. All of that is unspendable in our current construct. We have to sell assets or have investments mature so that it becomes realized, so that we can actually spend the money. And so that's one of the big disconnects is there under our current construct, there are scenarios where our earnings reserve account would have an insufficient realized earnings balance to provide for the POMV over the course of the next 10 years. And there's statistical probabilities that using various methodologies that suggest that would be, 80% of the time, or it's probably from like 50% to 100% of the time. So a pretty high statistical probability that you're going to not have sufficient money to make the transfer in the next 10 years. And then at the same time, you have this ability of the legislature to appropriate out of the earnings reserve account any amount with a simple majority of the two bodies and concurrence of the governor. So there could actually be an overdraw of the fund today of any available balance in the earnings reserve account without consideration of the needs of future Alaskans, and most importantly, probably next year's Alaskans, because they would have a difficult time or we would have a difficult time providing the POMV transfer if that were to occur. But that's what's on the table right now. And so there's a complexity to the two account structure and some deficiencies from a protectionist and from providing both of those perspectives that warrant consideration of that shift towards a one account structure. And then you kind of layer on top the current requirement that inflation proofing be done manually. So it's not an automatic, so like this year, the legislature didn't appropriate inflation proofing because of the reality of the potential shortfall of the earnings reserve account, the realized earnings in the earnings reserve account over the course of the next 5 or 10 years. And so Will they make that up in the future? Maybe, or maybe not. So maybe there's a degradation of the buying power of the fund that will never be returned. And so so it's a combination of reasons that all kind of dovetail together, and at some point they're actually kind of contradictory, but they all are true, and they all are reasons why it makes sense to consider the change.
Okay, thank you. I appreciate that, that further explanation. So that does it for me with questions, and I think members as well. So I just wanted to take a moment to thank you wholeheartedly on behalf of committee for taking the time to present to us. It's really helpful, and this has certainly been an eye-opening one for me, and there's some lessons learned from Alaska. We've had some presentations from around the world, and Alaska is certainly one of the gold standards in terms of practice around heritage funds and what to do with royalty revenues. So this has been really helpful for committee's understanding as we pursue changes to our own heritage fund. So wanted to thank you a lot for presenting to us. If you have any closing comments, by all means, please share.
Yeah, no, thanks again for the opportunity. Really appreciate it. I do think that that it requires a willingness to think beyond yourself, to be involved with the creation and maintenance of a permanent fund or a heritage fund, that you're giving something up, right? Hey, there's probably something that your communities could use today, and you have to say, well, I understand that, but we have to live within our means to some degree and ensure that our children and their children and so on are going to have the same opportunities that we do today. And so the challenge that represents is not lost on me, but it's certainly admirable when it occurs. And in our case, I look back at the people that made these choices in the 1970s, and it's just absolutely incredible that they did so, that, you know, they, and in, like I said, in good times and bad, they were willing to set money aside for the benefit of us today. And to not adhere to that on a looking forward basis, it would be a pretty terrible thing in my view. But I hope you guys have good luck in putting together potential constructs for the future of your fund, and happy to talk to you again or answer any other questions if they come up.
Okay, thank you very much. Appreciate that, and certainly, yeah, have taken the lessons that you're able to offer us into account as we move forward with this review. So seeing no further questions, thank you, Mr. Mitchell, again for presenting to committee. And this now concludes the public portion of the meeting. Colleagues, I'm going to ask that you stick around as we debrief and deal with committee business.